Okay, we're going to look at 10-5B, product pricing using the cost plus approach methods, differential analysis for accepting additional business. So Night Glow Inc. recently began production of a new product, the halogen light, which required the investment of $600,000 in assets. The cost of producing and selling 10,000 halogen lights are estimated as follows, and they give us our data. Night Glow Inc. is currently considering establishing a selling price for halogen lights. The president of Night Glow Inc. has decided to use the cost-plus approach to product pricing and has indicated that halogen lights must earn a 10% return on invested assets. We're going to be doing steps 1, 2, and 6 for this problem. Number 1, determine the amount of desired profit from the production and sale of the halogen lights. Now it says up here that we have to earn a 10% return on invested assets, and it tells us up here at the top that we had an investment of $600,000 in assets. So on our paper, I'm going to circle 10-5B. Whoop, I guess I need some lead first. There we go. I'm going to circle 10-5B so I know which problem I'm doing. I had $600,000 in assets. Okay. And I'm going to multiply that times the 10%. Which is the return on assets that was requested by the president. When I multiply those out, I get $60,000. Okay, so this $60,000 is my desired profit. Okay. Step 2 asks, assuming that the product cost method is used, determine A, the cost amount per unit. So we're going to stop right there. So step 2, we need to determine the cost amount per unit using the product cost method. Okay. The first thing we're going to look at is our variable costs. Now, if we look at the variable cost per unit that they've listed direct materials, direct labors, factory overhead, and our selling and administrative expenses. We're going to remove the selling and administrative expenses from this problem. So in our variable costs, we're going to take the $32, which was our direct materials, plus the $12, which was our direct labor, and the $8, which was our factory overhead. And it gives us $52. Okay, so this is our variable cost per unit. Our book told us that we're creating and selling 10,000 units. So we're going to multiply those two numbers together, and we get total variable cost of $520,000. Okay. Now we removed our selling and administrative expenses because we're looking at just the product itself. Okay, so now we got our variable cost. Now we need to find our fixed factory overhead. And if we look at our textbook, it says under fixed cost that our factory overhead is $180,000. I'm going to take those two numbers and add them together, and I get $700,000. And this $700,000 is our total manufacturing costs. Now I need to know what the cost is per unit. So 700,000 divided by the 10,000 units gives me a cost per unit of $70. Okay. Okay, so then our textbook tells us B, we want to find the markup percentage. So in step 2B, and I gave you the equation here to find the markup percentage, and it is the desired profit plus the total selling and administrative expenses divided by the total manufacturing costs. Okay. So in step 1, we found our desired profit was $60,000. Okay, to that we have to add our selling and administrative expenses. Our textbook tells us that we had fixed costs for selling and administrative expenses of $80,000. Okay, so we have our 60 plus our 80. And it tells us that we had selling and administrative variable expenses of $7. Okay, so we're going to add in here that 7 times our 10,000 units. So we have our desired profit, plus our selling and administrative expenses, and we're going to divide all of that by our total manufacturing costs, which we found in step 2A was $700,000. Okay. When I multiply this out, I'm going to get 70,000. So 60,000 plus 80,000 plus 70,000 is going to give me $210,000. Divide that by our 700,000. And we get 0.30, which is the same as 30%. So 30% is what our markup is. Okay. Now 2C is looking for the selling price of the halogen light. Okay, so I'm going to take, when we're setting our selling price, we're going to take the cost amount per unit. And this is the same number that we calculated in step 2A, so that one is 70, plus our markup. Okay, and our markup is taking that $70 times the 30% that we calculated right here in 2B. And if we multiply those out, we get 21. Add them together, and we get $91, and this is going to be our selling price. So we're going to sell these lamps for $91. Okay, so now we're going to jump to step 6. Okay, 3 and 4 are looking at the appendix, which you are more than welcome to go through and look at and complete those parts of the assignment, but we're going to move on to step 6. Step 6 talks about assume that as September 1st, 7,000 units of halogen lights have been produced and sold during the current year. The analysis of the domestic market indicates that 3,000 additional units are expected to be sold during the remainder of the year as the normal product price determined under the product cost method. On September 5th, Night Glow Inc. received an offer from Tokyo Lighting for 1,600 units of the halogen light at $57 each. Tokyo Lighting will market the units in Japan under its own brand name, and no variable selling or administrative expenses associated with the sale will be incurred by Night Glow. The additional business is not expected to affect the domestic sales of halogen lights, and the additional units could be produced using the existing productive selling and administrative capacity. So letter A, prepare a differential analysis of the proposed sale to Tokyo Lighting. So the first sections of your books talks about a differential analysis of different things, and we're going to look at one based on accepting or rejecting a special order. Okay, so we're creating a differential, oops, I spelled that wrong. Analysis. And our differential analysis is either to reject, which is alternative 1, or accept, which is alternative 2, the order. Okay, and then our date is September 5th. So our first column is going to say to reject the order. Which is alternative 1. Our second column is to accept the order. Which is alternative 2. And then our last column is our differential effect. On the income. Okay. So we're just creating a very basic income statement. Okay, so we're going to start with our revenue. And obviously if we reject the order, we don't bring in any money. Okay, if we reject the order, we don't bring in any money. If we accept the order, okay, if we accept the order, our instructions said that we would be selling 1,600 units at $57 each. Okay, so we would be making $91,200 if we accept this order. So that amount's going to go right here. And then we're going to list our costs. And we have variable manufacturing costs. Obviously, if we reject the order, our costs are 0. Okay. If we accept the order, we're going to take our $59 of total variable cost per unit, and it said there will be no selling or administrative, so we're going to subtract the 7 from that, and we get 52. Then we're going to multiply that by the number of units, which gives us 83,200. Okay. So then our last line is going to be, is this an income or a loss per unit? Okay. I'm going to put a single line here and subtract these. So obviously 0 minus 0 is 0. We're not gaining or losing anything if we reject the order. If we subtract our revenues and our costs, if we were to accept the order, we're going to get $8,000. So we have a net income of $8,000. Now let's look at our differential. Okay, if you look at our differential, our first column is all zeros. So our differential column is going to be the same as our acceptance column. Okay, so based on our differential column, we're going to make $8,000. So then your next question says, should the proposal be accepted? Why or why not? And I'm not going to answer that. I'm going to let you guys answer that question when you do your problem. Okay. If we don't accept the order, we're not making any money. We're not losing any money. If we do accept the order, we're going to make an extra $8,000 of income. Okay. At this point, you can head back to your PowerPoint if you stopped in the middle, or you can head on to your assignment if you did this last. Have a great week.